Hello and good evening. Here is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Thursday, the 20th of May. All right, after yesterday's bloodbath, what do we have left? Well, on Bitcoin, and we're going to focus just on Bitcoin here today because as goes Bitcoin, so goes the rest of the market for right now. Now, we saw a drop from about 60,000 over the last week or so to about 30,000. Now, how serious is that? Is that the beginning of something else? Or is this just going to be a slingshot? Well, what we found, and let's go out to a larger time frame chart to kind of give some perspective to this. All right, so as of last March, the price was down about 4,000, 39.55, something like that. And we've seen this epic rally up to 65,000 from there. I mean, are you kidding? Looking at the monthly chart, if we go out to the monthly chart, we can see just how strong this has been. So out of these months, we've had just the rare red candle and really unimpeded growth since that point. So it's not surprising that range expansion on the monthly chart is going to lead to range contraction. And that range contraction can come in many different ways. Sometimes it just goes sideways. Many times it goes straight back down. This is actually the fastest way to recharge a chart. And as we've talked about at length, we've had a super exhausted monthly chart, way beyond anything that we've seen to this point. And now it's just starting to recover from this rally based on the correction that we've had over the last few days. All right, so let's go to our series of tools here. And one of the tools that we're going to use is the fib retracement. So if I pull this back, and what we're trying to do is we're trying to take the current swing. And to me, the monthly swing started back here in March, but really the weekly swing started around last August. This is where this swing really began. And you could also make the case that there's another swing that began in January, but we don't really care that much about that one at this point. So fib retracements, here we go. We're going to draw this from, and let's make sure we're doing this to the very top. We're going to draw this fib retracement from the bottom of the swing to the very top, which is right around there, just shy of 65,000. A normal bull market, when we move like this, okay, we're going to have retracements that come down to the 38.2, the 50%, and as far as the 61.8. If we're in a healthy market, that 61.8 will hold. So here is kind of the crux of the biscuit. We have a huge decision box. One of two things is going to happen from here. Either we're going to rebound in some kind of complex rebound and then eventually claim the highs by going outside of that box at 60,000, or just as easily, we could see ourselves going down through the bottom of the box below 30,000. So if we do have a weekly close below 61.8 or 30,000, chances are that we're heading for that big swing test at about 20,000. Which is not good news if that happens. So really what happens over the next couple of weeks here probably will set the tone for the rest of this year. Now, I got to remind you guys, those of you that have been through this 3 years ago, that this is how this whole thing started way back then, right? So we had this swing to the upside. We dropped a huge amount, about 50% of the value, and then we bounced back up again. And then that lower high was where the devastation started. So let's go back to that on the daily chart. We're going to have to pull way back here, see if we can pull this back to the daily chart. So again, I got to remind you what happened back here, because this was this move in December as we got in through midway through December of 2017. We dropped nearly half the value of this. So there was just an epic, this is what I call the shot over the bow. So the shot over the bow occurred really in the middle part of December, and then we rallied up from there. And again, on the hard right edge, this looks like nothing other than just normal price action, doesn't it? Price is back up to 17,000. We're within shouting distance of the all-time highs once again. But this is where it becomes very, very important. This is the very first week of January. The price is, heading higher again. And then this is where the damage occurred. This is where we set up the lower high on the weekly chart. And again, if I go out there on the weekly chart, we can see what's happening here on the weekly chart. This is that lower high that's set up. And then this is where all the damage occurred. And then we actually had a lower high setting up on the monthly chart as well too, a little bit later. And once that broke below there, sorry, we're looking at the wrong, here's the lower high. Here's the lower high on the weekly chart. Lower high on the weekly chart, and it was all over by then. And then here's the lower high, the next lower high, which set up, which is more of a monthly signal. And then, this is a descending triangle pattern, which eventually broke to the downside later on that year. We don't have to go back through this again, but this is a good learning experience to show what can happen with this. So this is one possibility, is that a lower high set up and then we're heading lower. But just as easily, this could have set up with a consolidation and then slingshot move back up to the upside. That would have been totally normal. And this is what we have to do. We can't go into this situation currently and just assume that one thing or the other is going to happen. We don't know whether it's going to just set up this weekly hammer and then just scream higher from here, or whether this is going to set up to a lower high and then roll over. So to me, the answer to this is not going to be known for a few weeks, maybe 3 weeks, maybe 4 weeks, something like that. We'll see what happens with this. However, I will say that if we do drive below 30,000, then the issue is in doubt. Between 20,000 and 30,000, 20,000 is the swing test down there with the last breakout that we had, last major breakout that went above the 2018 highs. And then it was off and running from there. But if we lose 30,000, that's not going to be a good sign. So right now I've got a huge decision box for BTC versus the US dollar. It's in this area. Anything can happen, and you have to tell yourself that. Anything can happen from there. So what you don't want to do is get locked in on one outcome and say, well, this is what's going to happen because I read somewhere that somebody said that this was, you don't know. You don't know what's going to happen from here. Nobody does. Nobody has any clue what's going to happen from here. Nobody did back in 2018, and nobody does now. So what you have to do is figure out what you are going to do if the price breaks higher from here or starts to assume an uptrend, which it could. So I'll talk about that in a second. Or what are you going to do if this sets up with a lower high and starts to roll over again and undercuts 30,000? What are you going to do? What actions will you take? This is what's important. It's not about predicting the future. It's about programming yourself with specific actions based on what you see the price doing. What makes this difficult, though, is we have a huge range, and so it's easy to be wrong within a huge range, although you could take the opposite effect of this and say, hey, it's a huge range. I can just trade within this range. And this is where understanding smaller time frames come in. So what we're going to see first is this is a 5-hour time frame. Let's go ahead and take the fibs off of here. And what we have is a downtrend on the 5-hour chart. Lower highs, lower lows, lower highs, lower lows. What's going to happen first is if we do have a rally from this, you're going to see this trend line broken to the upside. You're going to see some combination of higher low, higher high combination of this. We'll see pretty good volume as it breaks above that line. And I wouldn't be surprised to see this occur sometime soon, is that this 5-hour trend line breaks to the upside and transitions back to an uptrend. Okay, so then we have an uptrend in the 5-hour chart, which will eventually break into the daily chart. You'll see that as a swing higher on the daily chart, but it's not an uptrend yet until we get a series of higher highs and higher lows on the daily chart. So again, use both of those rules. Right now, the larger time frame charts are in charge. And this is where things get confusing because certainly this is still a monthly uptrend, guys. This is still a monthly uptrend. So pardon all the lines that are on there, but I think you can see what's going on here. Let's go ahead and take the expected move off of here. I don't think we need this right now. Yep, let's get that off of there. So you can see that this is a monthly uptrend. This is just a pullback in the monthly chart. Weekly chart. This looks like it's a lower high. It really does. So even though I didn't give it much credence because everything was so mild, what's happened over the course of the last week is driven down. Selling is always strongest at the bottom of a move. This is always the way it's going to be, right? So we do have a downtrend on the weekly chart. So it's very important and it is powerful. And it's something that we have to reconcile. We definitely have a downtrend on the daily chart. So after this bear flag set up, we broke through that bear flag and down she goes. Just a reminder that the key for this, where we started to get, I won't say bearish, but a little bit less bullish, was that we were unable to break into new highs on any kind of decent volume. And that was a sign. When we start to try to break higher without the volume, look at what happened here. Just no volume for breakout. And this was a no volume for breakout either. And so back here, early May, I said, if we can't break higher from here, if we can't do so with great volume, we will end up going lower until we do find a place of support. And unfortunately, that was very, very violent yesterday with big volume that set that up. So daily downtrend, weekly downtrend, monthly uptrend. Okay, little bit of disagreement amongst the family of time frames. So for now, what you want to watch is what's happening on the hourly or maybe the 5-hour chart. Look for that reversal. What's happening here? Is it going to plunge down again? And don't forget, to go higher, you have to go lower first. So I wouldn't be surprised to see this. And this is actually a good use of the fibs for the way back down. So if we take the fibs here and if we start at the top, go to the bottom, this gives us some structure. Right now, the price has only been able to bounce up to a 38% retracement of the downswing. So I wouldn't be surprised to see this fail here, or maybe as high as 48,000 before swinging down again. It is necessary for us to bounce up to a lower high and swing down again. I want you to listen to that one more time. It is necessary for us to watch Bitcoin bounce up and then fail. It is absolutely necessary for it to fail because it has to print a higher low down here. You've got to build up the negativity. To go higher, you have to go lower first. You have to build up the negativity and then have to have institutional support step in and drive this thing higher. So yeah, all those evil institutions are going to be your friend if you're a long holder at this point. So please don't go out there slaughtering in social media any bears that are out there, because you got to have the bears if you want this to go higher. They serve a necessary function at this point. So even though they got us where we are right now, they will also be part of the cure. All right, guys, I've gone on for far too long on one chart here, but just understand the different time frames and what they're all telling you, and understand what you're going to do, whether the price goes higher, lower, or sideways. That's the whole deal. It's not about predicting the future. Hope that helps. Have yourselves a great Friday into the weekend, and we'll be back here on Sunday to see what happens from here. Take care.